Good day everyone, my name is Mary Jean Vivillana and my assigned topic for today is all about the Chapter 15B, Regular Income Taxation for Regular Corporation. So in this chapter, we are going to discuss the RCIT, the MCIT, and the difference of the two. The Improperly Accumulated Earning Tax or the IAET, Branch Profit Remittance Tax, and Indirect Remittance. So let's start. The regular corporate income tax. The regular income tax applies to all corporations in general. It covers all taxable income of corporations that are not subject to final tax or capital gains tax. So if the type of income is regular or ordinary, silang subject sa RCIT. Normally, sila yung nakikita sa income statement or statement of profit or loss ng isang company. The regular corporate income tax or RCIT is 30% of taxable income. Taxable on income derived during each taxable year from all sources within or without the Philippines at 30% tax rate on taxable income. Corporate tax schemes on regular corporation. Domestic corporation is gross income tax or regular corporate tax subject to the minimum corporate income tax or MCIT, while the resident corporation is subject to regular corporate income tax subject to the minimum corporate income tax. Under the NIRC, which is the National Internal Revenue Code, domestic corporations may have an option to be taxed at either the corporate gross income tax or the regular corporate income tax that is subject to the minimum corporate income tax or MCIT. The corporate gross income tax. The President, upon the recommendation of the Secretary of Finance, may effective on January 1, 2000, allow domestic corporation the option to be taxed at 25% of gross income after the following conditions have been satisfied. A tax effort ratio of 20% of gross national product, a ratio of 40% of income collection to total revenues, a VAT tax effort of 4% of GNP, and a 0.9% ratio of the consolidated public sector position or CPSFP to GNP. Cost ratio limit. The option to be taxed based on gross income shall be available only to firms whose ratio of cost of sales to gross sales or receipts from all sources does not exceed 55%. So, cost ratio limit ay hindi siya laging taxable dahil may mga firms lamang na available para maging taxable siya. Malalaman natin na pwede siyang maging taxable kapag ang ratio of cost of sales to gross sales or receipts from all sources ay hindi lalagpas sa 55%. The next one is lock-in period. The election of gross income tax shall be irrevocable for 3 consecutive taxable years during which the corporation is qualified under the scheme. When we say irrevocable, it means that it is not able to be changed, reversed, or recovered. Lock-in period is defined as the duration of time within which one cannot withdraw the money in 3 consecutive taxable years. So we are done discussing the regular corporate income tax or RCIT. Now let's proceed to the minimum corporate income tax. The most peculiar feature of corporate income taxation is the minimum corporate income tax or MCIT. Corporations are subject to a minimum corporate income tax of 2% of gross income. Ano nga ba itong MCIT? So, hindi po lahat ng negosyo or business ay subject sa MCIT. Ang sabi po dito ay corporations lang. Let's say na mayroon kang business at sole proprietorship ka, meaning to say, wala ka pong MCIT. Ang rate po ng MCIT is 2%. As a minimum tax, the MCIT is payable when the corporation has 0 or negative taxable income. Since income tax siya, Paano kung ang corporation ay walang income, as in negative taxable income siya? Subject pa rin ba siya sa MCIT? The answer is yes. Payable pa rin po siya. The second one is when MCIT is greater than the regular corporate income tax. Whenever na mas malaki ang MCIT sa RCIT, ang babayaran mo ay MCIT pa din. In other words, we are really comparing RCIT and MCIT, and whichever is higher, that is the tax payable from the point of view of the corporation. Timing of imposition of MCIT. MCIT is imposed at the beginning of the fourth taxable year, immediately following the year in which such corporation commenced its operation. Kung bago pa lang ang business, hindi siya agad subject sa MCIT. Kasi ang sinasabi dito, sa ika-4th year of operation pa lang ng business magkakaroon ng MCIT. Meaning to say na sa first 3 years of business operation, ang meron lang ay RCIT or yung tinatawag din nating normal tax. So, MCIT gross income under the NIRC. For corporation, ang gross income sa sale of goods ay gross sales, less sales returns, discounts, allowances, and cost of goods sold. And for the sale of services, gross income means gross receipts, less sales returns, allowances, discounts, and cost of services. Gross sales. It is the total consideration agreed upon by the buyer and the seller for the sales of goods. Pag sinabi natin gross sales, it refers to the grand total of all sales transactions over a given time period. This doesn't include the deduction like returns or allowance. Kabuuan siya ng sales na hindi pa binabawas ang returns, allowance, and discounts. So baka may nalilito at magtanong kung same lang ba ang gross sales sa net sales. The answer is no, because the gross sales ang pinaka-basis for measuring top-line revenue within a certain time frame. It would be impossible to calculate important revenue metrics katulad ng net sales, gross profit margin kung walang gross sales. While net sales, dito na i-deduct ang allowances, discounts, and sales returns. This metric indicates a company's profits and it is often reported on income statements. Ano nga ba yung allowance? It is the price reductions offered sa customer na nakabilit ang item na defective or may sira. Bibigyan sila ng discount sa pagbili ng defective item, instead na bigyan sila ng refund. While refunds are reimbursements given to buyers who return their purchases within a specified period of time, like warranty pag bumili ka ng appliances such as televisions, amplifiers, and ref. Discounts naman is the reduced prices offered to potential customers in order to motivate to make purchase. Kadalasan na binibigyan ng discounts ay yung may mga suki. Gross receipts. Cash collections for services rendered or to be rendered. The gross receipts means amounts actually or constructively received during the taxable year. However, for taxpayers employing the accrual basis of accounting, it would mean amount earned as gross income. Cost of goods sold, or you can also call it COGS, include all business expenses directly incurred to produce the merchandise and bring them to their present location and use. Ito yung nagastos or total expenses para sa pagproduce ng goods or products, such as materials na ginamit sa labors. Cost of goods sold is also referred to as cost of sales. For trading or merchandising concern, when we say merchandising, it is the type of business that purchases finished products and resells them to consumers, such as groceries. The cost of goods sold shall include the invoice cost of the goods sold, import duties, freight in transporting the goods to the place where the goods are actually sold, and insurance while the goods are in transit. B. For a manufacturing concern, cost of goods sold shall include all cost of production of finished goods and other costs incurred to bring the raw materials to the factory or warehouse. So pag sinabi naman po nating manufacturing business, ito yung type of business that uses components, parts, or raw materials to make a finished goods. These finished goods can be sold directly na sa consumers. Example na nito yung mga gumagawa ng sasakyan. So the cost of goods sold for an automaker would include the material cost for the parts that go into making the car plus the labor cost used to put the car together. The cost of sending the cars to dealerships and the cost of the labor used to sell the car would be excluded. Cost of services shall mean all direct costs and expenses necessarily incurred to provide the services required by the customers and clients, including number 1 dyan yung salaries and employee benefits of personnel, consultants, and specialists directly rendering the service. Kasama dyan ng sahod, benefits ng employees tulad ng paghuhulog sa kanilang SS, pag-ibig, or PhilHealth. Bali dito sa A, nakafocus sa expenses na nagamit sa employee na nag-render ng service. Sa letter B, cost of facilities directly utilized in providing the service such as depreciation or rental of equipment used and cost of supplies. Dito naman sa B, tinutukoy naman dito yung pag-rent sa space or mga pag-rent sa machineries at mga expenses na nagamit sa maintenance ng lugar o mga gamit para ma-render ng service. MCIT gross income under the regulations. RR 12-2007 included all other items of taxable income not subjected to final tax and capital gains tax as part of gross income. MCIT shall be computed as 2% of the total gross income subject to regular income tax. Based on Revenue Regulation 2-98 as amended by the 12-2007, it provides that a minimum corporate income tax of 2% of the gross income as of the end of the taxable year, whether calendar or fiscal, depending on the accounting period employed, is imposed upon any domestic corporations and resident or foreign corporations, beginning on the fourth taxable year immediately following the taxable year in which such corporations commence its business operation. So, may question lang na, ang MCIT ba ay karagdagang bayad sa RCIT? The answer is no. The MCIT is not an additional tax at the end of the taxable year. The MCIT is compared with the RCIT which is due from the corporation. Kung mas malaki ang RCIT, then hindi na magbabayad ng MCIT ang corporation. Let's have here the illustrative MCIT computation. So we're going to apply how to calculate the MCIT. So we have the gross sales for 1 million pesos, sale discounts and allowances for defects 30,000, sales returned by customers 20,000, interest income from bank deposit 20,000, and rental income from vacant premises 60,000. Inventory at the start of the year 220,000, gross purchases of merchandise for 700,000, net freight on purchases during the year 25,000, purchase discounts and allowances for defective merchandise is worth of 40,000, purchases returned to suppliers 50,000, and inventory at the end of the year is 160,000. The minimum corporate income tax shall be computed as follows. Bale, ilalagay lang natin dito yung mga value na naka-indicate sa past slides. So, gross sales is 1 million. Ilalas natin dyan yung sales discounts and allowances and sales returns. Bale, itong sales discounts, allowances, and sales return ay i-discuss natin sa mga susunod pa na slides. Bali, ang total ng mga ilalas ay 50,000 at ang magiging sagot niyan pag minus sa gross sales is 950,000. And ilas din natin yung cost of goods sold. Ang magiging sagot dyan ay 255,000 and add natin yung other taxable income not subject to final tax which is rental income from vacant premises. 60,000 niya. Bali, ang total gross income natin is 315,000. Ngayon, i-apply natin yung MCIT rate. I-multiply natin yung 2% at ang magiging value ng MCIT is 6,300. Excess MCIT carryover. The excess of the MCIT over the RCIT in any year is a tax credit that is deductible against any RCIT tax due in the immediately succeeding 3 years. Diba nabanggit ko po kanina na i-compute ang MCIT at RCIT at i-compare natin sila, and whichever is higher, yun ang gagamitin as income tax due. Now, ang sinasabi po dito ay kino-compare ang RCIT at MCIT. At kung mas malaki ang MCIT, pwede po itong ma-carry forward or maibawas against RCIT for the 3 immediate succeeding taxable years. Example po natin, kunwari, ngayong 2022 ay MCIT po ang babayaran natin. Tapos sa 2023 ay mas malaki naman ang RCIT versus MCIT. RCIT naman ang gagamitin or babayaran since whichever is higher. Now, yung excess na MCIT noong nakaraang taon, noong 2022, ay pwede pa din natin siyang magamit or mai-apply as deduction sa RCIT. Basta within 3 taxable years or within 3 years na magkakasunod lang po. Quarterly filing of income return. Corporations shall file their quarterly income tax returns for the first 3 quarters of the years, due on or before 60 days from the end of each quarter. The corporate quarterly income tax return shall be filed with or without payment within 60 days following the close of each of the first 3 quarters of the taxable year, whether calendar man yan or fiscal. So, konting recap lang tayo. Fiscal year is a 12-month accounting period that a business uses for financial and tax reporting purposes. A fiscal year can be different to a calendar year. It doesn't need to start on January 1 and end on December 31. Relief from MCIT. So, may mga question na pwede bang mag-suspend ang pagbabayad ng MCIT ng isang corporation? Kung oo, kailan hindi magbabayad? So, the Secretary of Finance, upon the recommendation of BIR Commissioner, pwedeng mag-suspend ng imposition of the MCIT sa mga corporation kapag nag-undergo sila sa following cases na babanggitin ko. Una na dyan ang prolonged labor dispute. It is the losses arising from a strike staged by employees which lasted 6 months within a taxable period and causes the temporary shutdown of the business operation. Ito yung mga pagwewelga na umabot ng 6 months sa loob ng taxable period na naging dahilan ng temporary shutdown ng business. So, yung pangalawa is force majeure. It is caused due to an irresistible force na tinatawag ding act of God, tulad ng earthquake, storm, flood, and iba pang natural calamities. This term would also include like war or insurgency. The last one is legitimate business reverses. Dito papasok ang malalaking pagkalugi kapag nagkasunog, robbery, embezzlement, or for the other economic reason as determined by the Secretary of Finance. The improperly accumulated earnings tax or IAET. IAET is a 10% penalty tax was imposed on the improperly accumulated taxable income of a corporation formed for the purpose of avoiding the income tax on its shareholders by permitting the earnings and profits of the corporation to accumulate instead of distributing them to the shareholders as dividends. Based on Section 43 of Corporation Code, it prohibits a stock corporation to maintain or retain earnings more than 100% of its paid-up capitals. So, dapat po ay nagde-declare ang corporations ng dividends sa kanilang mga shareholders. yung dividends na dineclare nila ay subject sa 10% final tax sa mga shareholders. So, kapag walang dineclare na dividends, meaning hindi nag-earn or nagkakaroon ng income ng tax ang government from the dividend tax. Hindi naman papayag ang government na mangyari yon. Dahil kapag nag-declare ang corporation ng dividend sa kanilang mga shareholders, magiging liable ang mga shareholders na magbayad ng income tax which is pabor sa government. On the other hand naman, kapag hindi naman nag-declare ang corporation ng dividends, then hindi liable ang mga shareholder na magbayad ng income tax. The following are prima facie instances of accumulation of profits beyond the reasonable needs of business and indicative of the purpose to avoid income tax upon shareholders. Number 1 is investment of substantial profit in unrelated business or stocks or securities of unrelated business. The second one is investment in bonds and other long-term securities. And the last one is accumulation of earnings in excess of 100% of the paid-up capital. In order to determine whether profits are accumulated for the reasonable needs of the business, as to avoid the imposition of the improperly accumulated earnings tax, the controlling intention of the taxpayer is that which is manifested at the time of the accumulation, not subsequently declared intentions which are merely the product of afterthought. Entities presume improperly accumulating earnings. Improper accumulation is prima facie presumed for the following. So, when we say prima facie, it is a situation where the facts and proofs shown to the court have enough merit for a trial to be commenced. So, number 1 is holding companies. Holding companies are corporations formed for the purpose of owning a controlling stake in another corporation. Investment and holding companies are focused toward the long-term capital gain formation rather than the dividend collection. By their nature, they are prima facie presumed formed for the purpose of avoiding the dividend tax on their shareholders. The second one is investment companies. Investment companies are entities that primarily engage in the business of investing, reinvesting, and trading in securities. They normally pull money from different investors and invest in different securities. Investment companies include mutual funds. The last one is closely held corporations. Closely held corporations are those at least 50% of the value of their capital stock or total voting power is not owned directly or indirectly by not more than 20 individuals. It is also held that a corporation owned by a public listed corporation is a public corporation. To rebut the prima facie presumption of improper accumulation, the corporation must be able to illustrate definiteness of plans in support of the accumulation supported by actions taken demonstrating their execution. Branch Profit Remittance Tax. Ang branch profit remittance tax ay under din ng special taxes, kasama nito yung gross income. Ito ay applicable lamang sa mga branches. So kung ang business mo ay walang branch, therefore hindi ka subject sa BPRT. Any profit remitted by a branch to its head office abroad shall be subject to a tax of 15% based on the total profits applied or earmarked for remittance without any deduction for the tax component thereof. The 15% branch profit remittance tax is a final tax which is required to be withheld at source by the branch of a foreign corporation. So, pag sinabi nating earmark, ito yung sinabi mo na hindi mo pa man totoong na ipapadala o na i-remit ang profit, pero nilagyan mo na ng note na ito ay ipapadala na, yun yung earmark. So, Sino ba ang mga subject na corporation dito sa branch profit remittance tax? Bali, ang subject dito ay ang mga branch ng resident foreign corporation. Sabi dito, kung nasa Philippines ang branch at yung head office ay nasa abroad, bali ang branch dito sa Philippines ay magre-remit sa kanyang head office. Kaya siya remittance mula sa Philippines papunta sa head office sa abroad. Bali ang rate nitong branch profit remittance tax or BPRT ay 15%. The NIRC used the phrase any profit remitted without limiting the same to current year profit remittance. The branch profit remittance tax therefore is understood to apply to remittance of prior year earnings. Pag sinabing NIRC, ito yung National Internal Revenue Code. Sinabi dito yung any profit remitted. Ito yung profit ng branch na talagang i-remit na sa head office sa abroad. Kaya kung ang profit na hindi naman i-remit, hindi siya subject dito sa branch profit remittance tax kasi baka may iba pang paggagamitan yung business or yung branch. Yung branch itself, meron na siyang tax sa kanya. Bali, ang pina-point out natin dito ay yung kinita na ng branch. Tas ngayon, ipapadala niya na yon sa abroad or yung head office. Ang tinatax talaga dito ay yung pagre-remit ng profit from the branch going to the head office. Hindi yung mismong operation ng branch, kaya nga siya tinatawag na remittance tax. So next, yung effectivity, hanggang kailan or kailan magkakatax ang isang branch. So kung kumita ngayon ng branch at hindi niya pa i-remit, therefore hindi pa ngayong taon ito magkakaroon ng BPRT, but rather kung kailangan antayin yung actual date ng pagre-remit ng branch sa head office or sa abroad. For the last part of my report, which is the branch capital accounts, assigned capital account represents the net investment capital of the home office to the branch. So it pertains to the capital of the home office. The accumulated profits or losses. From the word itself na accumulated or losses, dito pumapasok ang mga hindi na-remit, naipon na mga kita at mga losses or pagkalugi mula nang magsimula ang operation.